You know, we're all part of the economy, every single day. But some of the biggest forces that shape our choices, well, they're kind of hidden in plain sight. Today, we're going to pull back that curtain on one of these forces, a market setup that pretty much dictates the price of everything, from your phone bill to your weekly groceries.
I mean, think about it for a second. You shop around for a new mobile contract, and the big players, say Vodafone or EE, all seem to hover around the exact same price. You go to book a flight, same deal. It feels like you've got options, but do those options really lead to a big difference in price? Well, there's a reason for that, and it's got a name.
So, this whole thing we're talking about is a market that's not controlled by just one company, and it's definitely not controlled by hundreds. Nope, it's run by a handful of really powerful players. Welcome to the world of the oligopoly. So what exactly is an oligopoly? Well, it's a market where just a few massive companies control almost everything. It's not a monopoly where there's only one ruler. Think of it more like a small, exclusive club of giants who own the entire playground. They're big, they're powerful, and you better believe they are always watching each other.
Okay, so what does that domination actually look like in the real world? Let's just throw a number out there. 70%. What could that possibly be? It's a huge slice of any pie, that's for sure.
That's 70%? That's the combined market share of just 4 companies in the UK supermarket game. Tesco, Sainsbury's, Asda, and Aldi. They're the big 4. They control the vast majority of what we buy, leaving every other grocery store to fight over the scraps.
All right, so if a market is so dominated, you might be thinking, why doesn't some new, cheaper company just show up and shake things up? Well, it's because these markets are basically fortresses. They've got super high walls, and they are incredibly tough to break into.
And these are the walls we're talking about. To even try to compete with a giant like Tesco, you'd need billions with a B, just for stores and logistics. You'd have to convince millions of shoppers to abandon the brands they've trusted for decades, and you'd somehow have to match the massive cost savings, the economies of scale that these giants get because they buy in such enormous bulk. It's incredibly difficult for a new player to even get a foot in the door.
And this brings us to the really fascinating part of an oligopoly. It's like this high-stakes game being played by the companies inside that fortress. The big question is always whether they should compete like crazy against each other or, quietly cooperate.
This all comes down to a core idea: interdependence. Seriously, think of it like a chess match. Vodafone can't just make a move without thinking, okay, how is EE going to react to this? And Sainsbury's can't launch some huge promotion without calculating what Asda's countermove is going to be. In an oligopoly, every single action causes an immediate reaction.
Now, this interdependence leads to 2 very different strategies. On one side, you've got collusion. This is the shady stuff where firms secretly agree to keep prices high, basically acting like one big monopoly. And yeah, it's totally illegal because it rips off the customer. On the other side, and way more common, is non-collusive behavior. They still compete, just not really on price. Instead, it becomes this massive battle of advertising, loyalty cards, and cool new product features.
And all of this leads to a really strange outcome. In these markets, prices often seem to just get stuck. They're weirdly stable, even if costs for the businesses are going up or down. So what's going on there?
All right, let's play it out. Imagine one of the big mobile networks decides to raise its prices. What are its rivals going to do? They're going to do nothing. They'll just hold their prices steady and happily scoop up all the customers who just jumped ship for a better deal. So, raising prices? It's a losing move.
Okay, but what if they go the other way? What if they lower their prices to try and grab more customers? The reaction is instant. Every other major company will match that price cut, probably within hours, to protect their own market share. This kicks off a price war, and in a price war, nobody wins. Everyone's profits just get destroyed. So the safest move for everyone is to just stay put. And that's why prices stay so stable.
So here we are with this stable, concentrated market. Is this whole setup ultimately good or bad for us, the people buying stuff? Well, the answer? It's not that simple.
See, on one hand, a gigantic company can be incredibly efficient. Its sheer size lets it produce things at a much lower average cost, and in theory, some of those savings could get passed on to you. But, on the other hand, with fewer rivals to really worry about, there's a lot less pressure to keep prices down. If these firms aren't scared of getting undercut, they can keep prices higher than they would be in a market with tons of competition. Another potential plus is innovation. These giants have really deep pockets. They can fund huge research and development projects.
I mean, think about the incredible new smartphones or advanced car tech that comes out of these industries.
Of course, the flip side is that those deep pockets are filled with our money. The lack of fierce price competition can lead to what economists call supernormal profits, which basically means they're earning way more than they would in a more competitive world, and it's coming directly at our expense.
So, given this really delicate balance of pros and cons, who's making sure these powerful companies don't just abuse their position and start overcharging all of us?
Well, that's where regulators come in. Here in the UK, we have the Competition and Markets Authority, the CMA, and they act as the referee. They investigate any illegal price fixing, they can block mergers that would kill off too much competition, and they generally try to make sure the game is played fair for us, the consumers.
So, the next time you're comparing phone plans or walking down a supermarket aisle, you'll know the hidden rules of the game that's being played. And you can ask yourself, am I looking at real, healthy competition, or is this just the illusion of choice? You might find the answer isn't as clear as you once thought.